There we go. Do we have liftoff, Jen?
You do. Have a good show.
Alrighty. Welcome to Wall Street Beats, everybody. Thanks for joining us. Happy Thursday. I'm Steve Lamar, joined today by our banking and financials pro, Charlie Peabody. Sorry we're late. We had to pull him off the beach somewhere in Canada. And we got Benjamin Bry, our macro pro, joining us from Los Angeles. And I bet you we're going to talk about Scott Bessent today. What did he bring a water gun to a pistol standoff, or did he bring an actual bazooka? Because the bond market's giving him the old middle finger this morning. And then what did we have? We had Walmart this morning, which didn't look so great. I guess at 30 times, you're kind of thinking, why do I own this thing with those kind of numbers? But anyway, let's talk about some macro first. There was a robust discussion in a private chat I saw yesterday about this, and I know both of you guys have some views on the subject. So let's geek out and talk about what Bessent did yesterday with the bond market. Charlie, go.
Yeah, I'll start. I'll start. Yeah, I mean, to me, it's not surprising. I think any of us who follow government finances knew yield curve control was going to be employed somewhere along the line. 475 on the 10-year seemed to be an important level for markets. So I don't think it was a big surprise. But to me, there are a couple of things that I want to understand before I react in the markets. And one is, how is he going to fund this? To me, that's going to be important. Is he going to use the TGA account and draw that down? Or is he going to issue more bills, as a way of funding it? And that has implications because, if you're issuing bills, who's going to buy those bills? Is it going to be the overnight repo market, or is it going to come out of bank balances? And I think, I've been expecting a big deleveraging event before year end. And this thing is funded, from the banking system, where when I talk to banks, they're already telling me they're going to supply less and less liquidity to the capital markets because their balance sheets have become quite leveraged to the capital markets right now. And so I think you're looking at a situation where if funding is pulled from depositors for these buybacks, the banking system could be even less generous with their liquidity to the capital markets, and that could be an important event. So I want to understand how he's going to fund this, and I haven't heard yet any.
And Charlie, I've been reading some of the stresses in the insurance business, and maybe that's part of the reason the Lakers just got sold. What is that all about?
Yeah, so that's the next question: is why did he do this? Typically you want Treasury to act in a predictable manner, and that's very important to the bond markets. And this was, as much as I could anticipate yield curve control being employed sometime, this was not around a QRA announcement or, a normal, type of event. So it was, in that sense, it was surprising as an off-issue event announcement. So coming back to why did he do this? I mean, there are a number of reasons, but first I want to point out he's only buying off the runs, 10 years or greater in terms of maturity. So he is adding some liquidity to the off-the-run market, which is important because that's a very liquid part of the market. But when you look at the maturity of the U.S. Treasury debt, only 18% of the U.S. Treasury debt is 10 years or older in maturity. So he's not going to impact significantly the interest cost by buying back debt and capping rates through some sort of yield curve control action. So there's got to be an ulterior motive to why he did.
So he just wanted to fuck the shorts. Pardon my French.
Yeah, I mean, you could say that. I don't think that is a pure motivation. I mean, probably the most obvious is, he's been using Trumponian language more and more. I mean, when you think about the Iranian crisis, and he's gone out of his way to say, we're going to have a economic what's the word I'm looking for?
Economic boom is right around the corner after we get oil back to 60.
that like you've never seen in history before.
Right.
Those are Trumponian type phrases. So I suspect that he's under some pressure from Trump to rein in this rise in the bond market in order to keep equities afloat. Because as Ben has pointed out, at the Treasury, you can either control stock prices, bond prices, or currencies. And only 2 out of those 3 can you control at any single time. So if he's goosing bond prices to improve stock prices, which is Trump's report card for the economy, then he's going to have to, let the dollar fall, which is what you saw yesterday. So maybe he was trying to, impact, stock prices. But I believe there's an underlying stress developing in the insurance industry. And that's where I want to conclude my remarks, and then I'll turn it over to Ben. We know that Mark Walter and Todd Bowley are being scrutinized for how they've been using their insurance operations for capital arbitrage purposes to hide leverage and to finance their multiple operations. I truly believe from all the work I've been doing that this hidden leverage, this capital arbitrage, these self-dealings exists in other captive insurance companies throughout the private credit industry. And they've also been funding themselves more and more with Federal Home Loan Bank borrowings to fund this hidden leverage. As rates go up, you have to post more collateral in order to use those FHLB borrowings to fund your hidden leverage. And so Bessent has been very involved in trying to rein in some of these insurance company practices. And so I'm sure he's very knowledgeable about some of the stresses that exist in these balance sheets and these funding practices. So in my mind, there's something similar to the Liz Truss moment we had a couple of years ago in England, where the pension funds were caught with their LDI strategies. And I think there's a potential underlying current here that says Bessent was trying to do something to alleviate some funding stresses in the insurance industry. So it's speculation on my part, but I know, this is how the funding has developed. This is some of the pressures in the insurance industry. There's a lot of hidden leverage. So that could have played a role in his decision. I will end by saying I think Warsh is really unhappy with this.
I was just going to say Warsh must be furious about this.
Yeah, because Warsh wants the markets to do his bidding for him. Exactly. And if the markets are capped, then he's going to be forced. Everyone's now saying tightening is off the table. Yeah, everyone's saying that a hike is off the table now. I'm going to take the exact opposite. I think a hike is now more likely than not. So anyway, I'll leave it to Ben to take the other side of that argument.
I mean, Ben, generally this is kind of a risk-on move, wouldn't you think? Dollar down, bonds rallying. I mean, but the bond market just like totally reversed today. In the equity market saying, I don't think so.
Yeah, I mean, you got to always remember positioning and leverage are what matter. Yesterday, look, I've kind of been out there and arguing. I still like the short end. I don't think they're going to raise rates, but the long end's kind of ephemeral. So like I've like the steepener. Steepener is kind of similar to gold. I think yesterday was a weird day because when the flattener happens, if you go back to the beginning of the year and you line up the gold chart versus the just use the 210s or the 530 spread, they trade together basically. So yesterday you get gold up, dollar down, flattener. Kind of told you it was just more of like the steepener was a very crowded trade and they got bopped over the head. And some guys, just kind of like how we were crowded long the short end at the beginning of the year and we got bopped over the head in March. And they get, everyone has to unwind or, someone positioning unwind, short cover, if you will. And I'm not really surprised. And I guess, on that chat, on my chat, we were getting into it yesterday with Charlie and some other guys. It's $40 trillion of debt for the U.S. government, roughly, and you're not going to really, it's silly to think you're going to really be able to adjust that with $100 billion. So
right.
we were talking about there's a
So
signal.
it's just a signal, right? He's just sending a message.
And you got to remember also there's the Triffin's dilemma component. This is the world reserve currency on top of it, and so like being able to manipulate the cost of money on the long end of the world, but also it's like you got to remember like 15 or maybe 18, I can't remember exact percentage. And obviously it's different market value and par value of the total outstanding government debt is on the long end. So it's not really that much. So it's really just like, oh, we care about, maybe it's the housing market. We had that nice rally in mortgage rates last year, and then obviously it stopped in its tracks. I don't know. I guess the oil price
was it political, Ben? Was it just to get the long rates down, to get mortgage rates more affordable going into the midterms?
They didn't consult me, so I'll be speculating on this. But I
Not
think
this time.
Let me interject there because Trump administration has plenty of opportunities to affect the housing market through legislation. And Trump has always bypassed that, supporting that legislation. So I doubt this was an attempt to get mortgage rates down for residents.
Yeah, I kind of think
effect.
I kind of think of it, if you think about how the dynamics in Japan are, and they're like obviously the most advanced state because their bubble burst early. The Ministry of Finance comes out and they hit the yen. They keep the yen, from going up too fast. And it's sort of like that, right? Like the bond market was kind of steady along on the long end going up. It's like, hey, let's try and catch them off guard, slow the rate of ascent, not necessarily stop the train, but like keep speculators on their toes a little bit, because that's all the Ministry of Finance does, which is why the yen always has that left tail skew where you get huge rally, and then like look at the yen. I mean, before yesterday, and this like peso yen was already back to where it was before that whole shenanigans a couple weeks ago, and dollar yen was almost back at 160. That's that beach ball floats. And so if the dynamic here is the bond market wants to see either the AI capex not overwhelm duration, on the supply side, and maybe real rates of growth come down, or it wants to see the deficit not be, just so lack of respect, So, the bond market's been the pansy or patsy. I'm sorry, pansy. Well, I guess both. To since basically this whole decade, right? We had a few fits and starts rallies, but on Twitter, I put up the 10-20 year forward chart. I mean, that's a hell of a 5-year chart. It's just up and to the right with very few deviations. And so, when you look at that, it's kind of that's what the bond market's telling you. And then today to just come right back. Although I will say I didn't see what the headline was exactly, but oil was up 3% this morning. So in the pre-market, sometimes you get things kind of like
and jobless claims were a little bit soft, and so that people are thinking maybe a hike is possible. I saw a lot of headlines yesterday too, Ben, about the U.S. debt now over 40 trillion. When does that start to matter?
I guess it's just all about how much money wants to stay in the U.S., how much, what's the rate of growth. Look, I mean, we have high rates. There's no issue. Like take rates down if you're worried. Because remember, it's not really about debt levels. It's about debt service, right? So debt service is what matters. And right now we're doing this thing where we have high rates. Well, you know what? God forbid we have a policy.
As long as the growth is there to support the debt service, then you're okay. Growth slows, we're going to be screwed.
God forbid we have a policy that doesn't benefit the boomers for once. If you took that down, it's great for young entrepreneurs. Like, hey, cheap money on the short end, it'll help real estate. Yeah, maybe it's inflationary, but whatever. right now you're just shoveling cash to people in the boomer age and they don't even need it. So, I'm a big proponent of taking rates lower. And I also think that rates lower is deflationary, despite what people say. It's like, that's a huge loss of income to the economy. Like, that just doesn't get made up. And people just don't think like that. They think about it the other way of like, oh, it's going to be lent out. But I don't know, man. How much more lending out are we going to do right now? I mean, Charlie can probably tell you banks, capital markets are just gangbusters. I think we're at like the 100th percentile of capital markets right now, right, Charlie?
Absolutely. And loan growth is double, nominal GDP. So both loan demand and capital markets are booming. And that's what's starting to strain bank balance sheets in terms of their capital capacity and liquidity.
Yep. So everybody who subscribes and watches this show does it because they're looking for stock ideas. Does this change anything that you guys have been doing? Does yesterday change any of the positioning that you guys have had on? And do you have anything new that might come out of this?
Not for me. I pitched the ag sector on Monday, and I still believe the ag sector has a long way to go. And we're seeing, good prices in the grains that I think are going to help. If I can take 5 minutes, Steve, I'd add what I'm looking at and doing right now, and that is the cannabis. Stocks. I think there are four things to think about. One is purely fundamentals, and that's part of the story, although not the biggest part of the story. But you are seeing improved EBITDA and improved margins. And so the fundamentals, I think Green Thumb just recently reported their second quarter as Truly, and they both had improved EBITDA and margins. So that's occurring fundamentally. But I think the big story is around the possible re-rating of these stocks. And that revolves around, the regulatory re-rating of this business, moving cannabis from Schedule 1 to Schedule 3. And I'll come back to that because that's the main part of the story. The third reason is, the access to the capital markets. I don't know if you noticed, but Trulieve just got listed on the New York Stock Exchange. That helps their access to capital and potentially lowering their capital costs. And then the final is, this is an industry that's in consolidation, and you saw that recently with Curaleaf making an unsolicited bid for Aurora. So I think those are the four reasons: fundamentals, regulatory re-rating, capital markets access, and acquisitions. Yep. Consolidation. Yep. So think of it this way. There's a transmission mechanism that I think is very clean and describe why you could get higher stock prices. If you can get these things rescheduled as Schedule 3 drugs, that would lead to relief. So their tax rates would really drop from like 70% to 20% or something like that. And that's the 280E tax relief. That would lead to much higher free cash flow. Then, you could start to see these more and more of these things being listed on the New York Stock Exchange. That would open you up to broader institutional ownership and lower the cost of capital. So I like that transmission mechanism leading to a re-rating of these stocks. Now, in terms of the Schedule 3 hearings, there were briefings that occurred between June 29th and July 15th. Those briefings have been collected and are being reviewed by the administrative law judge, Derek Julius, right now. He is supposed to come out with an opinion soon, maybe this week, maybe next week. I don't know the exact timing. But ahead of that, you also have the DEA filing its final post-hearing brief this week, earlier this week, and it urged, Derek Julius to adopt Schedule 3. So that was a very important briefing that was posted this week. And I don't know if you saw, but a lot of the cannabis stocks were up like 5% yesterday, and I think it's because of that posting of that brief. So he will come out with an opinion. The DEA will have the final judgment as to what's going to happen, but the DEA has already showed their hand. there's going to be, I think it's either a 30 or 60-day period where you can debate this or counter the findings of Derek Julius. And then there's, a sort of a recess period before a final decision is made by the DEA. So I think by the fourth quarter, October, November, you're going to have a decision by the DEA on Schedule 3. Now, by the way, I should point out, this is for adult use, recreational use only. We already have medical use approved.
Yep.
So I think there's a huge re-rating potentially by the fourth quarter in some of these cannabis stocks. So I've been nibbling. There are three ways to play it, depending on your preferences. You can do MJ for Mary Jane. That's more international in scope, so you can diversify your risk, if you will, in case there's not a positive domestic ruling. You still have the international growth situation. Then there is MSOS, which is a broader, diversified ETF of cannabis stocks, including some of the smaller ones. So there you can pick up, the hope of acquisition and consolidation. And then there's WEED, W-E-E-D, which is very concentrated in the top names like Curaleaf and Trulieve and Verano. And those are the ones fundamentally that are going to benefit most from, changes to the tax system and increased potential demand as adult recreational use is allowed. So I think cannabis has got a good story right now.
Do you have any individual name favorites, or you're sticking with the ETFs?
I'm sticking with the ETFs.
Okay.
Yeah, I mean, I did notice that both Green Thumb and Trulieve had some positive fundamental news. Curaleaf is in the middle of trying to buy Aurora, so that gets a little messy.
Yeah. No, I've followed Trulieve for a long time, and that I've always thought that company was very well run, and that CEO has been there quite a while.
Yeah. So,
all right. Well, now we know what Charlie's really doing in Canada. He's doing marijuana companies. Field work. True. Going out in the field and testing the product. There you go. Good for you. All right, let's wrap it up, Ben. Anything else before we go?
Bitcoin 71,000. Bitcoin back, baby.
Wow.
Is it a short
like
there?
A cockroach, you can't get rid of it. I will add real quick on gold. I think Charlie were on the show a couple weeks ago, and on my Betty and the Squirrel show, I was talking to a lot of people, and everyone was kind of like saying the same thing. They all like, I want it at 3,500, 3,600, and it was like, this might be it. You know what I mean? We'll see here, because it's been a nice little squeeze, rally. Some people like, I was waiting for it, so there's a little chase. So I think it'll be an interesting spot right here. Like if gold can follow through, I think money will come back in, because then it'll be like, all right, we had 30% correction, kind of like in 2008 where it had 25% correction and then it went on to new highs. If not, maybe you'll get your 3,600, Charlie. But yeah, the Bitcoin also. The Bitcoin is and it must be something with like the expectation of that Clarity Act getting passed. Is that right, Charlie? Because I don't think
Clarity Act was passed. I know there's supposed to be some meetings with Trump in the crypto industry coming up here soon. So maybe that's part of what's going on.
I said
there was a big thing yesterday I saw.
Expectation of it. And remember, we live in a front-running world where there's insider trading is rampant. So sometimes the price action can give you the tell before, that's the one. Absolutely. That's the only benefit of insider trading, is that you can see, if you are an adept market watcher,
follow
you can
the
see
money
things first.
That's right. Follow the volume.
Insider trading has now been legalized.
Apparently. Only
Ivan Posky he's probably dying in his grave or turning over in his grave.
Right. All right, boys, let's wrap it up. Thanks, everybody, for joining us on Wall Street Beats. We will be back here on Monday. Have a great weekend.
Get yourself an Einstein bar.
And get yourself an Einstein bar. We're running a special through the summer. Our sponsor here at Wall Street Beats. And we've got a deal for you if you enter this code, Wall Street 25. All right, boys, thank you.
Thanks.
All right.
Bye, guys.